So, interesting thing happened yesterday. I went to Whole Foods. I wanted to get some stuff to prepare for dinner. I was looking forward to cooking a nice meal, right? And my wife calls me. I was at the checkout. She said, we need milk. And I said, oh, shoot. I'm already at the checkout. I'm about to leave. I had my 3-year-old with me, and, going places with a 3-year-old's already a whole situation. So I said, I'm just going to look on Amazon. I never bought milk or looked at milk in my life on Amazon. I don't even know how that thought popped in my head to let me go see on Amazon to buy a gallon of milk, right? But I was like, I don't even care. This gallon of milk could be like $6. I don't care. It's more like my time's more valuable than like if I have to overpay for milk. And plus I was looking at Whole Foods. Whole Foods has milk. Whole Foods milk is so expensive, it's ridiculous. Like Whole Foods milk is like $4, $5, $6 a gallon as it is, right? Because I don't know, I guess they massage the cow's ears or give them like, therapy sessions or something like that. So Whole Foods milk's already out of control. So I go to Amazon, I type in milk, right? Pops right up for me. Guess how much a gallon of milk is on Amazon? This is going to blow your mind. $1.97. I said, what? That has to be like a typo or something. Like, there's no way that's correct. $1. I haven't seen a gallon of milk for $1.97 since the great financial crisis. $1.97. I'm like, is it a half gallon? I'm like, what? I'm like, no, this is legit. I'm like, wait, it's $1.97 and they're going to deliver it to my house in 4 hours from now for free? Okay. Let's go ahead and do that. And I asked my wife, I said, you see gallons of milk $1.97 anywhere? Because she does the food shopping all the time, right? If I go to the grocery store, it's first like a freak situation because there's like something specific I want to cook. So I'm like, I want to go on the weekend to a grocery store like Trader Joe's or Whole Foods or some other grocery store to get some specific items, right? And she said, no, you can't get milk for $1.97 in any of these grocery stores. Like, no, it's at least in the 2s, if not in the 3s or 4s for a lot of them, right? That's a problem, ladies and gentlemen. That's a problem, right? You look at Walmart. Walmart does about 60% of their U.S. business from grocery. And I used to shop at Walmart back in the day when I was, money was very, very tight from 2009 through 2011. I used to shop on the regular at Walmart. Like, that was a place I went because Walmart usually had the cheapest prices on a everyday basis, basically. Sometimes you get better deals at a grocery store, but you needed to do something crazy, like buy 4 of some item or whatever, right? I usually found that Walmart was the cheapest. So, 1 out of every $4 roughly is spent at Walmart with grocery. And I'm looking here and I'm like, oh boy, like you guys got something coming for you in regards to this situation, right? Like the grocery stores, I would not want to fight Amazon in regards to this situation, right? And you look at AWS's operating income, Amazon Web Services, operating income last quarter, $10 billion plus. That's 11 figures, ladies and gentlemen. Operating income the previous quarter, $11 billion. Operating income the previous quarter, $10 billion, right? Kroger doesn't have that. Walmart doesn't have that. None of these grocery stores have that. How do you compete? If Amazon wants to get serious in groceries over this next 5 years, which you start selling gallons of milk for $1.97, I would say you're getting pretty serious. And you're going to deliver it to people's house for free? You don't have to go to the grocery store and push around a basket and, are you kidding me? I would not want to fight them. That's impossible. You're never going to win that war. You're never going to win that war, right? Jeez. And it's just a matter of time before they go after the big dog, right? It's just a matter of time before that happens. So this is going to be brutal. And so at the end of the day, Amazon stock, you got to own this stock. And you got to understand this stock is a buy in every market. I don't care if the market goes up a lot, down a lot, sideways a lot. Amazon's a buy. Amazon's a buy and a buy. Every day, every week, every month, and every year since this company went public back in the 90s, the stock has been a buy. And here today in 2025, it's still a buy. There's a reason it's a big position for me in the public count, $331,000 position. I own it in other portfolios as well. I own it almost in every one of my portfolios. At the end of the day, like Amazon's a must buy. Show me one time since this company went public in the 90s where it was not a buy. It doesn't exist. It literally, you could have bought it at the peak of the tech bubble. You could have bought it 6 months later, 6 months before, 12 months later, 12 years later. Doesn't matter. It's always been a buy. It's still a buy. It's a stock everyone has to buy. Everyone has to hold as a core position because you have that insane e-commerce growth that just continues to go up year after year. It looks like they're about to push heavy into grocery, which is a massive market and going to get everybody even more in a normal basis to actually go to Amazon to order everything. Like that's the one component that's kind of been missing from Amazon over time is like grocery, right? it looks like that's going to stop going. That's going to stop being a problem as well. And then they got the AWS business, which is massive. They got the ads business, which is huge. Whew, like it's incredible. And so this is a stock you got to own, man. You don't own it, and it's like, why not? Why wouldn't you want to own it? Like, they're the one company that you can't compete with. You can't compete with them. You literally can't compete with them. I don't care who you are. Amazon comes to compete with you. It's just good luck. Good luck, man. It is unbelievably tough to compete with those guys, right? Because here's the deal. If Amazon wants to start selling gallons of milk for 99 cents, they could do it. If they want to start giving away milk for free with every grocery order over $30, they could do it. A grocery store can't do that. They don't have the margins. Walmart can't do that. They don't have AWS. They don't have that massive ads business and all. Like, you can't do that if you're those guys, right? Target, another one. They've been actually growing nicely in grocery over the past decade, but whew, it's tough, man. Brutal. So the moral of the story is own Amazon because, they're just an impossible force to compete with.
How would you like access to all my best course curriculums? My Becoming Master of the Stock Market course, my Stock Market Investing Mastery course, my Stock Options Mastery course, my Millionaire Playbook. How would you like access to all my best courses, as well as the ability to have access to my 6 and 7 figure plus Discord community, where we're constantly keeping in touch with each other, talking about what's going on in the market? How would you like exclusive weekly videos from me? How would you like the ability to see what stocks I'm buying and selling in my $2 million plus Fidelity account? If that all sounds pretty interesting to you, apply to join my private group. That is going to be linked in the description area down there. You can click on that, fill out an application, and go ahead, hop on a call with Andre. Andre will walk you through the whole process. He'll walk you through the whole group, and you can go ahead and join us in there. Once again, the link for that is in the description area.
Alrighty, next one up here. Let's talk about the 3 grade A stocks everyone must own, okay? First one of these 3 is this one. AMD. AMD's a beast. It's a must-own stock at this point in time. Everyone's got to own this stock. The levels of growth here that this company is going to start to report is going to be phenomenal, right? Now, in regards to that growth, right? Obviously we've had this initial move in regards to AMD, right? And it's been beautiful, and congratulations to everybody that's made some money. I hope you made a whole lot of money in AMD so far, right? It's been beautiful. But keep in mind, this is just the beginning. How is it just the beginning? If you look at analyst estimates, right? Now we're looking at 1000xstocks.com. We're compiling what analysts are expecting for this company as far as revenue growth goes. 28%. Next year, revenue growth, 20%. Where are they getting these numbers? I'm like, analysts are crazy clueless. If you look at almost all these analyst projections, they're projecting revenue growth. I mean, I've seen some lower into the 15 range. I've seen some like in the 20s. I don't know where they're getting, I don't know like if they're even paying attention to what's going on with AMD. I'm going to be completely honest with you guys, because this company's going to way outgrow like these sorts of numbers. Look at this I'm showing you now on a quarterly basis. So the quarter they're about to report here in the next few weeks, analysts have them only growing revenue 28%. Keep in mind, this quarter is actually going to start having the 355 numbers in there. This is huge for AMD, right? The next quarter is going to have 355 numbers, and the next quarter as well. Them only doing 19 and 19% revenue growth. And the other parts of their business are also inflecting better now at this point in time. So I'm like, I don't know what analysts are up to here. Or like, this is crazy to me. Like, come on, analysts. Like, holy smokers, that's no dang jokers, right? Now, additionally, analysts, even in some of these quarters, when they're going to start to have the 400 series hit the numbers, right? Like right here, they have them doing like 35% revenue growth, 45% revenue growth, 46% here. They basically, analysts' best case is some quarters are going to maybe go into the 30s and 40s, right? Here's the deal. If you look at NVIDIA, when they were going through their major first couple years of their growth cycle, right? AMD's just finally, this next quarter they're about to report is just AMD's first foot into the AI opportunity, and then it's just going to get more extreme over the next 2 years, essentially, right? But if you look at what NVIDIA was reporting for revenue growth numbers, 101%, 205%, 265%, 262%, 122%, 93%, 77%, 69%, and even the latest quarter, 55% revenue growth, well deep into the AI cycle. In the best case scenario for any quarter coming up in the next number of quarters is 40-something% revenue growth. What are they doing? What are these analysts doing? Are they not paying attention? Like, come on, man. Like we already have a model built here to show us rough revenue growth rates, right? Now you might think, oh, AMD is not getting to 265% growth. They're not getting to 262. NVIDIA's a 101, right? You're going to tell me they're not going to get to 55% revenue growth for some of these quarters? You're going to tell me for some of these quarters they're not going to get to 60 or 70%? I think that's very doable. I think it's debatable if they're ever going to get to 265% revenue growth. I don't think it's that debatable that they could get to these sorts of numbers at least, right? And so analysts are way, way too bearish on this, right? And while I was actually prepping this video, I had Fast Money on my phone and Dan Nathan talking down AMD, talking up NVIDIA, making bad points in my opinion. I always like it when I go against the stock Dan Nathan's, against. I always feel good about that. But, and it just goes to kind of like these Wall Streeters still haven't woken up to the massive opportunity here that is an AMD stock. They have not woken up to that opportunity, and it's right in front of them, right? So the next 24 months, AMD stock, where do I see it going? I believe 400's in the bag for AMD now at this point in time in the next 24 months. I think it's a coin flip if the stock's going 500 plus in the next 24 months. Like it's a 50-50, I would put it. And if I had to put odds on it, I live in Vegas, we put odds on everything. The odds that this stock could actually go 1,000 plus in the next 24 months, it actually has a chance. It's a low probability in my opinion. I'd put it at about 10% odds, but it is a chance. If they start to, no one is prepared for AMD if this company starts to report revenue growth rates of 50+%. No one is prepared for that. No one. No one's talking about it. None of these Wall Streeters are talking about it. None of these fund managers are talking about it. If all of a sudden, next thing you know, in the next year or two, AMD starts coming through with 50% plus revenue growth rates, Wall Street's going to lose their mind. What happens if AMD starts to grow 70%, 90%? Or what happens if they get to NVIDIA type numbers, 200%? I'm not banking on that. But what if it happened? No one's ready for this, man. No one's ready for this. And so when you look at AMD, you're like, could there be a lot more opportunity here? The answer is absolutely, okay? Alrighty, next stock up here. The second stock, these three grade A stocks, that is a great buy. Amazon, amazing Zon. This is the second one of these three. Before I go into Amazon, right, and this is a position that's very important to me in the public count. I'm up $116,000 on it so far. Listen, man, before I go into the numbers, before I show you my bull case, bear case, base case for Amazon over the next number of years, where the stock's going, all that sort of stuff, listen, just get back to yourself. Think about how much money you have spent on Amazon over the last 5-10 years. Think about how much money you're going to spend on Amazon over the next 5 to 10 years. Think about how much money your friends and your family members are going to spend on Amazon over the next 5, 10, 15, 20 years. Think about how much money all the businesses and companies that use AWS, that you use AWS as their backend, right, and their cloud provider, and how much money Amazon makes off of all those folks. Like, just think about all this for a moment. And owning Amazon stocks is actually a great chance to give back to yourself. It's like, credit cards do cash back or whatever. Like, this is like a cash back situation, right? You spend $5,000 a year on Amazon, great. You own a lot of Amazon shares, you probably hopefully made more than $5,000 back on that. You spend $2,000 on Amazon, products you buy on Amazon a year, hopefully you make a lot more than $2,000 a year on Amazon stock, right? So it's a chance to give back to yourself when you own Amazon stock. Now, I posted this on X here today. People are complaining about Amazon and X. I'm like, what are people complaining about? So people are complaining about Amazon today. No clue why. Amazon's one of the easiest buys in the stock market. Low risk and high reward the next 5 years. Buy and don't stop buying Amazon stock. Yeah, I'm up 6 figures on Amazon stock. Just in the public count, never mind private portfolios, right? I'm still actively buying Amazon stock right now. That speaks volumes. As not often I'll make 6 figures plus on stock and I'll be like, still need to be loading, and where I'll still be buying that stock actively. That very rarely happens. You got to be a special company to do that, okay? No, here's a deal with Amazon. The stock trades way too cheap right now. You look at a forward P on the stock at 31, right? Keep in mind, this is probably, that 31's actually probably a lot lower, okay? But you compare it to somebody like an Apple, another peer company, one of the biggest companies in the world, right? Apple trades at a 33 forward P. So higher than Amazon, but the difference is Amazon's a company you can count on growing double-digit percentages each year. Apple, you cannot count on that. analysts have them growing revenues this year 8%, next year, or current year expected revenue growth about 8%, and next year about 5.5% for Apple, right? So no question, if you compare Amazon versus Apple, like Amazon's a way better buy, right? But remember, I talked about this number is actually probably lower. It's probably they're probably trading at a forward P right now like 25, 27, 28, something like that, and not actually 31. And here's why. We're going all the way back to the beginning of 2023. Look at every single quarter, and what do you see? Monumental beats in the earnings per share. Every quarter, they beat 10 cents here, 31 cents here, 35 cents, 20 cents, 15 cents, 24 cents, 29 cents, 38 cents, 23 cents, 30. These aren't like, oh, they beat by a penny or a few pennies. No, they're knocking out of the ballpark every quarter. So when I show you Amazon's trading at a 31 forward P right now, understand it's probably like a 27 in reality. Because my guess is over this next year, the company's going to come in and smash analyst estimates, right? So the stocks trade the 2-year forward P is probably the actual forward P in my opinion. And the 2-year forward P on Amazon's probably 22. It's probably a do-si-do in regards to this one, which for a company growing top line and bottom line double-digit percentage, come on, man. That's a little bit of a joke there. So what's my bull case, base case, bear case for Amazon? Okay, so my bull case for Amazon, 14% revenue growth per year, 2026 to 2029, 20% net income growth for the company. Net income should grow at a much faster clip than revenue for Amazon. And a huge reason of that is not only AWS and the profitability there, but the ads business. The ads business is starting to become substantial for Amazon, and that, we know the big money's in ads, right? Ask Google, ask Meta, like that's straight profit. So I have been getting a 12% net income margins come 2029, 35 to 40 PE under a bull case where, mid-teens revenue growth and 20% net income growth. 35 to 40 would be very fair. Gives you a compound annual growth rate of 23 to 27%. And the stock should be somewhere between, let's call it about $500 and maybe $560 in this sort of bull case scenario. But what about my base case? What about what I actually expect for Amazon? Here it is. My base case for a company, 12% revenue growth per year over the next 4 years, right? 26 to 29, 18% net income growth. Once again, get to my 12% net income margins come 2029, 33 to 38 Ps, fair for a company growing low double-digit revenue, and let's call it high teens net income growth. $433 stock to maybe a $500 stock, and a compound annual growth rate of 20%. You give me a CAGR of 20%, I gotta take it. I can't just sit on my hands in that situation. I got to take that opportunity. And that's my base case for Amazon. It's nothing crazy. Like, you just look at the numbers. Is it crazy to assume Amazon will grow 12% revenues per year? No, that's nothing crazy about that, right? No, my bear case for Amazon has them only growing revenue 10% per year, which I don't know how they would only grow 10%. When you think about Amazon Prime, be able to go up on price on that from time to time. When you think about the e-commerce business continue to grow, when you think about AWS continue to grow, when you think about the ads business continue to grow, it's almost impossible for me to imagine Amazon only growing 10% per year over the next 4 years. But for my bear case, I did it. Okay, 15% net income growth per year would be horrible for the company. 30 to 35 Ps, very fair for a company growing top line 10%, bottom line 15%. I get a CAGR of 13 to 18%. If I'm not going to lose money on a stock over the next 4 to 5 years, under my bear case assumption, and not only that, but I'm going to outperform the S&P 500, buy and don't stop buying. Give me every share in sight of that stock. Every share in sight, right? Now, here's the next important thing. And by the way, Amazon's on the way to becoming $1 trillion revenue company. Under my bear case, Amazon eclipses $1 trillion plus in revenue in 2029. Under my base case, they reach $1 trillion of revenue in 2028. And also in my bull case, they reach $1 trillion of revenue in 2028 for the first time. So it's going to either be 2028 or 2029. This company's going to be doing $1 trillion plus of revenue. Incredible, right? But here's the thing you got to understand about just the e-commerce business. Keep in mind, the AWS business, ads business, those are straight profit. Those are massive businesses in revenue terms as well, but they're straight profit businesses. But if you're wondering where Amazon's revenue is going over time, you got to understand how commerce goes over time, okay? So Walmart, if you look at Walmart, back in 1995, and you would have thought Walmart already had locations everywhere. They could have locations, right? Like, can Walmart even get that much bigger? Walmart was doing $106 billion of revenue back in 1995. They're going to do about $700 billion, over the next year. $700 billion of revenue from $106 billion. If you look at Costco in 1995 was doing $20 billion of revenue. They were already a giant. They're going to do 260 plus, right? 260 plus in revenue, way over a 10x, right? Why do these sorts of companies continue to grow so massively even when they're huge, right? Like, why is Amazon, like, Amazon's about to go to $1 trillion in general company revenue wise, but I think by sometime in the early 2030s, the company's going to be doing $1 trillion plus just on the e-commerce side of the business. But why? Well, one, you take market share over time if you're a dominant retailer, and that's what Amazon does, right? Two, everything gets more expensive. And so imagine going into a Walmart in 1995. Everything was dramatically cheaper than it is today if you go into that same Walmart in 2025, right? Go into a Costco and go buy a big bunch of toilet paper in 1995 and go do that same exact thing today. It's massively more expensive. So the revenues go up over time, the profits go up over time, as long as the profit margin can stay the same, right? Because if you sell something for $1 and you got a 50% profit margin on that, you make 50 cents of profit. You sell something for $10 and you get a 50% profit margin on that, you make how much? $5. It's beautiful. Isn't that beautiful? It's a beautiful, man. It's a beautiful thing. Okay? So, moral of the story is buy Amazon. Don't stop buying that stock. That's just the greatest gift of an easy money stock. Okay? Alrighty, folks. Number 3 of these grade A stocks. They all begin with A. And then, so if you're wondering why am I calling them grade A stocks, grade A income statements, grade A balance sheets, and they all start with an A. Okay? But this one's controversial. And it shouldn't be controversial, but it is a controversial stock out of these 3. It's probably the most controversial. You know what it is? It's Adobe. The stock has been awful the past year, down 34%. And this could be another tax loss harvesting stock over the next 2 months, so watch out. Like, this one could continue to sell off short term, right? Because people are, my guess is funds, everybody that's bought Adobe stock's basically sitting on massive losses. Like, if you bought Adobe stock at any point in the past many years, you're sitting on massive losses. So that's a lot of individual investors, and that's a lot of funds. That's a lot of investment funds, right? Now, when it comes to Adobe, you look at their latest quarter, like, business is phenomenal. Like, they had 10% year over year revenue growth on a constant currency basis. They had 14% non-GAAP EPS increase. Like, this is phenomenal. Like, there's nothing to be ashamed of here, right? Very impressive numbers for the company. Now, in regards to everybody that uses it, right? Business professionals, consumers, creatives, marketing professionals, and things like that, right? The big worry about Adobe is they're being disrupted right now because of ChatGPT, Google Gemini, all these other products out there, right? That maybe can make images for you, videos like that and things like that. And you've seen some of the like teaser videos and like the hype videos around these ChatGPT and Google and things like that. And it's like, oh, that looks good. Those images look good. Those videos look good. Listen, I've been testing these products and it's just crap, man. It's like generic AI slop, I call it. Okay. At the end of the day, if you need to make a great image for your company or business or a piece of creative content, listen, you got to use Adobe's products still, right? Or something that is similar to Adobe's products. You can't just rely on AI. You can't say to ChatGPT, please make me a blah, 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 blah. No. It's going to do a far worse job than what somebody that's good in this field would do. I mean, even somebody that's bad in this field might do better than these AI products as far as all that goes right now. Like, if I need to make a new web page design, like, you still need a professional to do that. And everything across the board, images, videos, all that sort of stuff. So, like, the products are cool that are out there, but you still need an actual human to really do this stuff on a high level. Otherwise, it just comes across as like generic AI slop, and it's not at a high level. So the whole worry about like, oh, Adobe's doomed, I just don't think those people that are calling it are actually in this field and actually testing these products out, right? So something to keep in mind there. What about my bull case, base case, bear case for Adobe? So my bull case for Adobe has them only doing 10% revenue growth per year over the next 4 years. That's my bull case. Think about it. I'm doing 10% revenue growth for a bull case for Adobe. It's nothing crazy, right? Net income growth at 12% for the company. 25 to 30p would be very fair for a company growing 10% top line, 12% bottom line. That gives me a CAGR well into the 20s off of a little 10% revenue growth per year. That's a pretty attractive stock. right? Here's my base case. This is what I actually expect for Adobe. I expect them to only do 8% revenue growth per year over the next number of years. Very conservative. 10% net income growth on average over the coming years. 23 to 28 P is pretty fair for Adobe in that situation. Gives me a CAGR of 16 to 22%. These are very modest expectations I have for Adobe. And I still get great CAGRs, right? Now, if they can amp it up a little bit, we're talking things will be much better. My bear case for the stock, I am only doing 2% revenue growth. This would be brutal, and 2% net income growth. In that sort of situation, I would lose a little bit of money over the next few years, right? So at the end of the day, like when I run my Adobe numbers, like the stock's a buy, right? I can make an argument that AMD and Amazon are better buys, right? But at the end of the day, like, you know, if you want to be diversified here, and keep in mind, if Adobe has better growth rates than what I have here, my base case is at 8%, that CAGR will move up significantly. If they actually do 10 or 12 or 14% revenue growth per year, right? Let's say they knock it out of the ballpark with their products and services over the next few years, they're able to continue to go up on current customers. Like we could be talking about the CAGR is actually well into the 20s, if not the 30s over the next few years. So just something to keep in mind in regards to Adobe. But look at the charts feature on 1000X for Adobe. If you had to tell me, show me a perfect stock, Jeremy, I would show you Adobe. Look at the revenue. This is where their revenues trended. This is where their revenue is expected to trend. That's perfection. Look at the gross margins of the company. Look at the net margins of the company. This is perfection, ladies and gentlemen. Look at the earnings per share, where it's gone and where it's going over the next over the next 12 months. Unbelievable. Look at the free cash flow on a trailing 12-month basis and where that's trended. Look at the operating cash flow and where that's trended. Look at the operating income and where that's trended. Look at the shares outstanding going down, 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 down. That's exactly what you want to see as a shareholder. Like, I don't know what to say other than Adobe is one of the most perfect stocks you could ever see. And so unless they actually end up being massively disrupted, until that day, like this is one of the most perfect stocks literally in the market, just on a numbers basis, right?